Okay, let's just start the analysis on the 4-hour chart first. Perfect. Okay, so we got some pre-marked zones right here at this region that have been marked months ago. And what can we see on the 4-hour chart? On the 4-hour chart, we can see that price has created huge impact movements to the downside over and over again, right? Huge inefficient movements to the downside, reversals to some supply zones, following the same pattern over and over again, creating 4-hour supply zones, reversals to the supply zones, creating 4-hour movements to the downside, inefficient movements, break of structures, break of demand zones, break of demand zones, break of structures, creating supply zones over and over again, reversing to supply zones, creating inefficient movements, reversing to supply zones. And as you can see, currently price is in a pullback phase to some supply zone. So price is actually in the pullback phase to this supply zone up here. And yeah, here's this line. This line has been marked for weeks or months for me on my chart. And this line is a weekly low chart. I just want to show you this weekly low that price was actually reacting on. So as you can see, this is the weekly chart. And price is creating a downtrend on the weekly chart too. So every single higher time frame trend is following a weekly chart. I mean, a downtrend. Sorry, someone is just texting me on Discord and it annoys me. So price is following a downtrend on the weekly chart too, creating pullbacks, creating downside movements, creating pullbacks, creating downside movements. And basically, this was the less recent low point. This is the less recent swing low point. Because as you can see, this is the less recent swing high point. This is the less recent swing low point. So anything between this high point and low point was just a pullback phase of the weekly chart. And as you can see, the pullback has happened here. Here was the pullback to some supply area at this region. This supply area couldn't break below the last recent low point here, created liquidity for this low point. Here, as you can see, here was liquidity built up for this low point. And price has just swept this liquidity and it has stepped into this weekly low point, this week low point, because this week low point couldn't break above the last recent high point. So it couldn't break above this high point. There was no change of character in the overall higher time frame. It's a monthly trend maybe. So there was no higher time frame change of character. It was just a pullback phase. And right now, price is reacting on this weekly low point. As you can see, here's the reaction on this weekly low point, and price has just tapped this zone. Okay, on the weekly chart, we can't really identify a good zone at this region. And I believe on the daily chart, there won't be a good zone also. So if I zoom in, you'll see that there's literally no clear zone on the daily chart too. And there won't be on the 4-hour chart too. If I come here, you'll see that there's no clear zone inside of this movement. So we will just title it as a weekly low point, and price is reacting on a weekly low point, week low point, because this week low point couldn't break up the last recent high point, right? So this is a week low point, but it can still reverse price because it's still a weekly point. It's still a weekly low point that has a higher power and impact than a 4-hour order flow. But price is still following the overall main trend and main higher time frame order flow, which is still bearish. Okay, now that we know all of the higher time frame facts, it's time to analyze the 4-hour chart. And as you can see, price has just created another impact movement to the downside, high impact, high inefficient movement to the downside that was breaking below this demand zone right here. This was the last recent variable daily demand zone. I remember it. And after this, price has just created a pullback here, pullback phase of the overall 4-hour and daily chart. This pullback phase has built up loads of liquidity right here. All of this liquidity was built up for the upcoming shorts to the downside, but there's still liquidity on the upside too. This liquidity is built up for some higher supply area. So we have few options right here on the 4-hour chart. So knowing the fact that price is currently inside of a weekly low point, we can expect either a pullback or either the continuation of the main trend. Because if you take a look at this, price doesn't really like to reverse to the extreme zones that are causing the break of structures, demand breaks, etc., etc. And it doesn't really like to reverse to these supply levels, these points. And as you can see, these supply levels keep getting untouched. These are untouched supply levels over and over again. Untouched supply level, extreme level, untouched supply level, extreme level, untouched supply level, extreme level. And we have a new untouched, yet untouched supply level, which is the extreme of the less recent liquidity sweeping and inefficient movement here to the downside, as you can see. So on the daily chart, no, we are on the 4-hour. So on the 4-hour chart, we can't really expect that much of a thing because it's simply in a weekly low point, a pullback phase started of the main trend. So basically, if price can create a change of character on the 15-minute chart anywhere right somewhere around here without tapping into, for example, this 4-hour high point, we can expect the movement to the downside and expect the continuation of the main order flow to the downside, because this is what price is doing over and over again. it's creating a 15-minute change of characters randomly on the chart, creating a 15-minute change of character without tapping into a higher supply zone. As you can see, it just formed liquidity, created a change of character on the 15-minute chart, more likely here, started the movement to the downside. Same happened right here also. There was no supply tap, there was no supply resection right here, just a change of character somewhere around here on the 15-minute chart or the 1-minute chart, and price just blew to the downside once again, slapped the liquidity. So we can expect the same movement once again on the 15-minute chart again, or even if price can change character on the 5-minute chart, and after that it changes character, for example, on the 1-minute chart too, then you'll be able to take a short continuation, because that's what we literally did in May. As you remember, and if you are part of the community, you can remember that this was basically our trading plan in May. If price could have changed character on any zone, on any 5-minute, 15-minute, 1-minute zone in May, we were just hopping on the trend, because the trend was extremely, really bearish, as you can see. And the bear trend has just kept going and going and going. So basically, that's all about the 4-hour chart. We can either expect the tap of this zone up here, or without tapping into that zone, we can expect the reversal maybe in the 50% or anywhere somewhere around this. But we have to see the 15-minute chart, because we can't really say much about the 4-hour chart, because there's nothing happened yet. There was not even a 4-hour change of character here, as you can see. Basically, we can title this as a buy to sell candle or sell to buy candle, because as you can see, price is coming down, coming up. This is the definition of the buy sell to buy candle. It has been explained in the webinar, and price was just reacting on this candle. As you can see, built up liquidity. Liquidity has been swept, and we can title this as a change of character, but this is a really weak change of character. So we can't really trust this zone. We can't really trust this character changing level. So that's it. That's all about the 4-hour chart. I just switched to the 15-minute chart because it will be much cleaner. And just a minute, guys. Sorry, let me just drink a sip. So the 15-minute chart, as you can see, price has actually changed character after the last movement to the downside, last liquidity sweeping movement to the downside, and reaction on the weekly low point. So the character changing movement has happened, as you can see. And this was the downside structure. Here was the downside structure, as you can see. This was the last recent low movement, which couldn't break structure to the downside. Here, as you can see, it didn't happen with body closure to the downside. So basically, this was the last recent supply zone, or this was the last recent supply zone. But this supply zone, this last recent 15-minute supply zone, have been changed right here, as you can see. But price has stepped into this supply zone up here, and it has created this extreme zone that has caused the next inefficient movement to the downside. But this inefficient movement, downside movement, has failed to break below the last recent low point right here. So that was a no break of structure to the downside, but this will be still our extreme right here. This is still the extreme, because it could have changed character, or basically this is the last recent supply zone somewhere around here, maybe on the 5-minute chart, maybe on the hour chart. But on the 15-minute chart, we can't really identify a good 15-minute supply zone here. But somewhere around here, a supply zone has broke structure here to the downside, and this break of structure was strong enough to break below the last recent low point, but it wasn't strong enough to break below the last recent swing low point here. So there was no break of structure, but there was a break of structure. So if you take a look at this chart, you'll see that the flip has actually happened here on this supply level. So there was a flip zone because price was reacting on this supply zone. As you can see, here was a reactional candle, and after this reactional candle had been formed, price has just flipped this candle and created liquidity and tapped into the extreme zone. There was liquidity, right? Price has built up this liquidity line. This isn't liquidity. This is the second tap of the liquidity. This is the first tap of the liquidity, but in itself, this isn't a liquidity. And here's my first question for you. If you raise your hand first, you can answer the question. Why isn't it a liquidity? Why can't we call this as a liquidity right here? Noel, please, Pascal.
Because on the right side, it's just candles next to each other.
Exactly.
They're not doing anything.
Exactly. Thank you for the answer. That's the right answer. So as it was told in the webinar, in some previous webinar, this isn't liquidity. Equal candles next to each other can be considered as liquidity. But please just check that webinar if you haven't seen that webinar already. I'm explaining everything in that webinar. So once again, this can be considered as liquidity. The liquidity is right here. This is the first tab, this is the second tab, this is liquidity. This can be considered as liquidity, but this in itself can be considered as liquidity, right? Okay, so as you can see, the flip has happened from this demand zone here. This was the flipping demand zone, which have been tapped. as you can see, prices built up liquidity for this zone, inside of this zone, maybe for the 50%. Let me just check the 50%. Yeah, prices built up liquidity for the 50% of the zone. Here's the trendline liquidity. This is trendline liquidity. First touch, second touch, third touch, fourth touch, fifth touch, 5 touches on this trendline liquidity. This liquidity have been swept here with this movement, and the 50% of this whole flipping candle right here have been mitigated. As you can see, here's the mitigation of the 50% of this candle. And after this mitigation, price has just started the overall upside movement, and the continuation of the bull trend has been continued, right? But these movements, these upside movements are really slow compared to the downside movements. So this is just a pullback phase. Just compare these upside movements with these downside movements. Huge inefficient movements over and over and over and over again, over and over and over again. And look at these upside movements. These are just correctional upside movements. These are just pullback phases of the overall short trend, the overall bearish trend. So yeah, we can see that the weakness of the bull trend, and we can expect the continuation of the bear trend at any character changing movement or any 5-minute, 15-minute, 1-minute character changing movement. So we are expecting and waiting for these scenarios mainly in this session. Okay, what else can we see? The price has tapped into a significant supply zone right here. Here was a perfect tap of this supply zone, as you can see, and the 50% of this zone have not been mitigated yet. And yeah, basically price is just breaking structure again and again and again. Here was a less recent break of structure on the 15-minute chart after the demand tap. So this is a break of structure to the upside. Here was the next break of structure. This is the less recent break of structure to the upside. And let's see if this was a break of structure. No, it wasn't a break of structure, because as you can see, no, I'm asking it from you. Why can't we call this as a break of structure? If you raise your hand, you can answer the question. Why isn't it a break of structure to the upside? Thomas?
There was no body closure.
Exactly. There was no body closure, so we can consider this as a break of structure to the upside. Break of structure has to happen with body closure, right? So this isn't a break of structure. We can consider this as just a simple liquidity sweeping movement to the upside. And after this, price has just reversed. So basically, the less recent zone for us is this one, or even this one, somewhere around this, which has caused the less recent break of structure here to the upside, as you can see. And price is on the way to actually sweep this liquidity or change character right here. We will see what will happen. But our plan will be that we find this zone on the 5-minute chart, because for a 15-minute zone, this will be too huge. And the upside of the zone have been already mitigated, but we know that the 50% zone needs a deeper mitigation, at least a 50% mitigation. So you can refine this zone on the 5-minute chart. And that zone will be this one right here. This is our mitigated, not unmitigated, refined 5-minute zone from the 15-minute chart. So this is the extreme of the less recent break of structure. But if I switch to the 5-minute chart, basically that's all about the 15-minute, because everything has been already swept, break of structure. Yeah, everything has been analyzed. So switching to the 5-minute chart, what can we see on the 5-minute chart? That the break of structure on the 5-minute chart has not happened either, but we can see some character changing movement on the 5-minute chart. If you take a closer look, what has happened here? Price is coming up. Here was the demand touch. Here was the 15-minute demand touch. As you can see, price is coming up, creating demand zone touches again, inefficient movements to the upside, break of structures to the upside. Here was the 15-minute real break of structure happened from this zone with this inefficient movement. After this, price has mitigated this 5-minute zone, as you can see, with this pullback phase, zone mitigation, continuation to the upside, reaction on this weak supply zone, flip of this weak supply zone from this candle. Here was the less recent break of structure. This less recent break of structure has happened from this zone. Prices reacted on this zone, as you can see, and the flip of this zone has happened with this movement. So this zone has been actually flipped by this supply zone here, but this supply zone have been changed immediately after the flip. So this couldn't give any high impact movement. This couldn't give any reaction for price to reverse on this zone and go down to this demand zone. And instead of reversing on this actual supply zone here, price has just changed character here to the upside with this movement. So there was a character changing movement to the upside. And after this, price has created a pullback to the demand zone that has changed character. Here, as you can see, here is the top of the demand zone. A breakout structure has happened on the 5-minute chart. This is the 5-minute structure. 5-minute breakout structure has happened here. After this, a 5-minute breakout structure has also happened here. And after this, price could not break the swing high. This is the 5-minute structure, right? This is the substructure of the 15-minute chart. Basically, this is the 15-minute chart. This is the 15-minute structure, this one, and this is the 5-minute structure, right? But we already talked about this in the webinars, talked about this in the video course. So we already know what substructure is, what the real structure, what the higher time frame, what the lower time frame structure. We just map it out. But even this whole movement, this whole 15-minute bullish movement with breakout structures, character change, and etc., is just the pullback phase and substructure of the 4-hour chart. But just you just have to know the difference. So 5-minute chart. Back to the 5-minute chart. Less recent breakout structure. After the less recent breakout structure, price has changed character, right? Price has changed character here to the downside. On the 5-minute chart, there was actually a flip zone. Flip has happened from this supply zone up here, as you can see. So yeah, basically the flip has happened from that supply zone. I will just mark that supply zone out. Supply. Here's the less recent flip of this demand zone. And price will actually break below or react on this extreme demand zone too. We will have to see what will happen inside of this zone. I will mark it out as the less recent variable demand zone, because as you can see, price has built up liquidity for this demand zone. First liquidity, second liquidity, double bottoms built up for this zone. And let's see if price can react on this demand zone. If there will be a reaction, then we'll be able to actually execute some sort of long trade, or if there won't be a reaction, then we'll be able to look for short continuations to the downside, for example, from the zone that was breaking below this zone. And yeah, this is the 5-minute plan. This is the 5-minute plan. This is the higher time frame plan too. All we have to do is switch to the lower time frame now and see what the actual session will bring for us. Okay. Any questions about the higher time frame analysis? Anyone? Any question about the analysis? No. Okay, then we will continue on the 1-minute chart. Okay. Yeah, session open will be here perfectly. I will just zoom out a bit. Let's see what has actually happened here. Okay. So we will start the session. Let's see what happens. Price is reacting on the 5-minute zone, as you can see. React, okay, and it has just flipped the zone. Okay, let's see what has happened here. We can call it liquidity, as you can see. Here was liquidity, second liquidity, double bottoms, or even we can call this as a liquidity trend line here, and price has just swept the last piece of the liquidity right here. And below this liquidity, if you take a closer look, there's a 1-minute zone lining up for us. Here's a 1-minute zone that price has just recently touched, and this zone is above the extreme 5-minute zone. Okay, just keep this in mind. If okay, let's be the new narrative. Let's do the new narrative here, because price has touched this zone. If this zone, if this 1-minute zone, which is actually important for us because it's a flip zone. It's a flip zone for us. Price is coming in a downtrend here, as you can see. This was the last recent supply zone, or this was the last recent supply zone. Price has just reacted on this supply zone here. And from this demand zone, the overall supply level have been flipped with inefficient movement to the upside. And there was a huge liquidity line built up for this demand level. Double bottoms here, liquidity line here, all built up for this level. So there's a chance the price won't touch this deeper demand area. We can see we have to build a new narrative. If price can create a change of character here to the upside, for example, or maybe create a flip zone or any bullish reversal sign, then we'll be able to take a continuation trade, maybe targeting this level, or we can just TP it in 1 to 5 because actually this is a counter trend trade movement. All longs are considered as counter trend trade movements. Or the second plan is if price breaks below this zone and touches the 5-minute extreme and creates a change of character after the extreme touch, then we'll be able to take a long trade up to some supply level here. But let me just switch to the 5-minute chart to see if this was actually a change of character here. So the 5-minute candle has closed below the demand level. it has closed below the demand level and closed below the liquidity line too. So we can consider maybe this is a change of character to the downside here, but we have to see how price reacts on this zone. Because if this was a change of character to the downside, then we have new scenarios built up on the 5-minute chart. Because if this was a change of character here to the downside, and this is a swing low point, right? This is the swing low point of this whole bullish movement to the upside. And if this was a change of character here to the downside, then we can expect a reversal either from this demand zone or either from this demand zone to some higher supply area. And after a higher supply area, we can continue the overall bearish movement, which is our main direction on the 4-hour chart. Because as I said, movement has slowed down on the 15-minute chart. So these are slow movements. So shorts have shorts have actually a higher probability to play out than longs. And if I take a look, price has just reacted on a supply level. Yeah, there was actually a reaction on this supply level here. As you can see, this is perfect reaction. Full zone mitigation. After the full zone mitigation, price has just reversed to the downside. So this actually makes the short scenario stronger. This makes the short opportunities and short entry stronger and puts it in prior. So our prior right now are shorts. Our secondary trades are longs. So for longs, we need strong change of characters, right? Okay. So switch back to the 1-minute chart. Let's see what will happen right here. Perfect full body mitigation, as you can see, after the perfect full body mitigation, the reversal has happened. Basically, this was liquidity built up, sweep of the liquidity, or let's see if there was any tap. No, there were no. So sweep of the liquidity right here, mitigation of the full zone, mitigation more than the 50% of the zone, and reversal to the downside. So let's see what will happen. Let's see what can we expect from price here. We are on the 1-minute chart, and let's just play price forward. Okay. Price is reacting on the last recent supply zone, as you can see. Okay. Okay. Let me just play it back. There was a reaction on the last recent supply level, as you can see. Here was the last recent supply level. That price was just reacting on this supply level, has caused the liquidity sweep here to the downside and caused the less inefficient movement, less breakout structure, and less demand touch. And price was just reacting on this supply level. There was a reactional candle. This was a reactional candle. This was a reactional candle. And the next candle have been already spoiled for us that this zone have been flipped. And actually, a strong change of character has also happened to the upside here, as you can see. This was the last second supply zone that has caused the next recent breakout structure here to the downside. And after this was the last recent supply zone that has caused the last recent breakout structure here to the downside. So we can consider this as a strong change of character to the upside, and there was a reaction on this zone. And the reaction have been happened from this flip zone. So this is our 1-minute flip zone. Okay. So I'm just asking you guys, will you set any order limit on this demand zone? Will you try any order opportunity on this demand zone? Or you will just wait for short continuations? What will be the safest scenario? If you raise your hand, you can answer this question. Mark?
We have to wait the liquidity creation.
Exactly. That is the strongest scenario. If there will be liquidity built up for this zone, we can take this setup without any trouble. Zoom out a little. Okay, I will zoom out. Why do I need to zoom out? Okay, I will just continue. So I will rather skip on this trade because there's no liquidity creation, and this is a counter trend trade, an extremely counter trend trade, right? Because every single long in this session could be considered as counter trade trend movement. Mitigation has happened on this zone. Let's see what will happen after this. Okay, touch of the flip zone. This was the flip zone, if you remember. This zone, this 5-minute zone, have flipped this 5-minute level. So the flip zone touch has happened. New perspective. What can we expect from the flip zone? If the flip zone can actually change character here to the downside and break below the last recent demand level here, if there will be a change of character to the downside, then we'll be able to take a short scenario down, up on the supply level down to this demand level, right? This is our scenario right here. If this happens, then we'll be able to take this scenario. If the break of this zone happens, so if price flips this zone to the upside, then we'll be able to take a long continuation. Let's see what will happen. But I will rather wait with longs because, yeah, I just explained why. Okay, there was a reaction, another reaction. Price has just mitigated more than the 50%. The full body mitigation has happened. So we can consider this as a liquidity sweep. And if it gives a reaction, then this will be still the character changing level for us. So this isn't the character changing level. And I'm asking you, why isn't this a character changing level? Why can't we consider this as a character changing level? If you raise your hand, you can answer this question. Guys, Mark?
It doesn't break structure.
Exactly. We can't consider this level as a character changing level because this low couldn't print a new high. So there was no new high has been printed. So this won't be a character changing level for us. If this low creates a new high, then this will be the character changing level. But until it can break with body closure, then this will be the last recent character changing level, and this has to be broken. This will be the character changing level for us. Okay, that's what will happen. Reaction and flip of the zone. Okay, the flip of the zone has happened. What can we do in this scenario? We can actually put a limit order here, and it will be safer if there will be liquid creation for this zone. But let's see. I would say that the trend seems to be like changing, because on the first flip zone, we did not enter in a position because we consider this as a risky, because this is a risky counter-trending movement. But price has flipped the higher time frame supply zone here, right? So I would say that let's try an entry opportunity on this zone. Yeah, question about the gambucks. I don't know if you will question that why I have 4 lines or 3 lines inside of the gambucks. I'm testing out the new method. The new method is that I'm actually not taking entry limits on the 50%. So I'm not aiming for the 50%. I'm aiming for the 0.25% or 0.75%. So if I'm taking a short opportunity, I'm opening a position on the 75%. If I'm taking a long opportunity, I'm aiming for the 25%. But in this session, let's just skip this. Because I'm actually testing this in my own backtesting sessions. So if it works in the future, I will update you about this future again. So if it works in the future, I will update you about it. If it doesn't work, then I will just leave it. You know, you always have to try out new things, and I'm here to try out new things and share those new things with you guys. So let's just stick with the 50% entry right here. Where's the entry limit? Yeah, 50% entry, 1 to 5 long, and it can cover the whole zone. Let's see if the full body, no, the full body can cover the whole zone. And my entry is right here, and my TP will be 1 to 5, or the extreme 1 minute zone. Extreme 1 minute zone right here that has changed character here to the downside is 4.8 risk-reward ratio away. This could be the last target point that you can actually target, or the high point could be the target point, but I would rather target the 1 minute zone here because this is a counter-trend trade movement. But this trade can't really reach the 1 to 5 minimum risk-reward ratio for us. So I'm asking you guys, will you enter in a trade right here? Yes or no? Just circle the 1. Only 2 people are watching this session? Or what's up, guys? Be active. Come on, guys. Be active. Be active in this session. This is an active session. Okay, so 50% of you will enter. Another 50% wouldn't enter. Okay, I will respect that. And my personal choice will actually decide here. I won't enter here. Because my personal plan, remember, you have a plan. My personal plan tells me that I won't enter in a trade below 1 to 5 risk-reward ratio. And if the trade is 4.9 risk-reward ratio away, it's not even 1 to 5 risk-reward ratio, I won't enter in a trade because my plan tells me to only enter if the actual risk-reward ratio reaches 1 to 5. If it's 4.8, 4.9, 4.7, 4.5, I won't enter in a trade. This is my personal plan. This is how I trade. I never enter in a position below 1 to 5 risk-reward ratio. And this is my golden rule. I won't skip it. I won't leave it. It's my rule. That's it. But I will paper trade it. So let's just consider this is a paper trade. Let's see if it plays out. Full body mitigation has happened. So let's just test that. Okay. That's why I said I'm testing the 75% entries. As you can see, no, the 75% is still untouched. So the 75% is still untouched, the 50% is still untouched, but still it's 1 minute zone. we can consider it as it has been fully mitigated, right? So it has been fully mitigated. So I don't know. I will delete this order and just close this zone. Let's see. Price is reacting on something right here. Okay. Reacting on the last recent zone. Building up nice amount of liquidity here, as you can see. So this can be considered as liquidity. These aren't 4, 5, 6, 7, 8, 9 candles next to each other. This can be considered as liquidity. This liquidity is building up for something, maybe the higher time frame supply zone, or maybe this zone right here. Let's see what will happen. But this can be considered as liquidity because here's the first touch, downside movement, upside movement. Here's the second touch, downside movement, upside movement, third touch. So this is a perfect liquidity built up. Okay, character changing movement has happened. Perfect. So character changing movement has happened. And actually, let me see if there was a higher time frame supply, because this was a 1 minute supply zone. Let's see if there's a higher time frame supply zone. Yeah, there is a higher time frame supply zone. Price was just reacting on this candle, the extreme of the movement, or the 50% of this candle, because the 50% has not been mitigated yet on this candle, as you can see. And price has just perfectly mitigated the 50% of this candle, or this candle. This candle is the extreme, or this candle is the extreme, but price was reversing on something. On the 5 minute, there's no clear zone. On the 3 minute, yeah, actually, in the 3 minute, this is the extreme, and price has just perfectly mitigated the extreme of the movement. Here, as you can see, so the mitigation has happened. Okay, I will refine it and switch to the 1 minute chart. So the mitigation has happened here. After mitigation, the character changing movement and flip movement has happened. Okay, actually, I remember for this trade. Perfect. This will be a nice to explain scenario. I'm asking you guys, so the character changing movement and the flip has happened. One character changing movement and one flip movement has happened. I'm asking you, which supply zone will be the right in this case to enter on? In a short opportunity, for example, which supply zone is the right supply zone to enter on? Whoever raises their hand first, no, Mark, please just wait. Whoever raises their hand first can answer this question. Did someone raise their hand? Come on, guys, be active. Okay, Mark.
The 1 minute upper extreme zone, maybe.
You mean this one?
Yes.
Perfect. Exactly. I remember for this scenario because I took this trade in live. And I did set an entry limit order on this zone, and I did set an entry limit order on this zone. But after I backtested this day, I just realized that, just take a look at this. Perfect example. You can easily become part of the liquidity if you don't pay attention to the liquidity. This zone is heavily part of the liquidity because above this zone, there's liquidity, right? Here's liquidity built up. As I said, there was a first touch, second touch, third touch built up for the extreme zone, the extreme character changing movement zone. Yeah, you can say that this zone has created nothing. This zone couldn't even break below this sub-demand zone because this isn't a real demand zone. This zone couldn't even break below this demand zone right here. So why is it the right demand zone, I mean supply zone in this case? Because it has been explained in the cancellation webinar, in the flip webinar, in the character changing webinar. So in every single webinar, I just explained it for you guys that if a zone can create a breakout structure, change of character, zone flip, etc., but still it has liquidity below it, then the zone that has created the flip, breakout structure, character changing movement, etc., will be the zone that will be part of the liquidity, and the extreme zone that has created nothing but has liquidity will be the right zone to enter on. So this is a perfect example for this webinar that I just hosted you weeks ago, that this zone will be part of the liquidity. And I remember for this because I entered on this zone already, and I entered on this zone too. So I had a limit order on both of these zones. But after I backtested this session, I just realized something. I just realized that this isn't the right flip zone actually, because as you can see, this couldn't even react right here. I mean, this demand zone couldn't even, or this demand zone couldn't even break above this last high point. So there was no breakout structure right here again. So this isn't a flip zone. This isn't a flip zone for this demand zone right here, because it has flipped nothing, right? This wasn't the demand zone. This demand has been order mitigated. So the actual change of character has happened from this extreme zone because it has liquidity below it. This is the extreme of the whole character changing movement right here. So I will set a limit order on this zone first, but this will be just a paper trade because, as I said, this was part of the liquidity. This is heavily part of the liquidity. And I will set a limit order on the 50% of this zone too, because this is the right zone choice. And yeah, I just wanted to talk about this. This has been mitigated. This has been mitigated, right? You could say that this has been mitigated, that I said that this zone has been mitigated. So for a 1 minute zone, any kind of percentage mitigation will be perfectly enough. But there's one exception for this. When there's liquidity inside of the zone, when price has mitigated the zone, for example, like this one, and built up liquidity inside of the zone, because the next recent candle here has already mitigated maybe the 1% of the zone. But this mitigation has built up liquidity. And only in this scenario, when a 1 minute zone has been mitigated, for example, a small percentage of that zone has been mitigated, but price has built up liquidity inside of this zone, then there's still a chance that price will reverse on the 50% of that zone, because there's liquidity inside of that zone, and that liquidity has been built up for that zone. So this, just remember for this case, remember for this scenario, if you meet with this scenario in the future, just remember what I'm saying now, that for a 1 minute zone, any kind of mitigation is enough, right? That's what I'm always saying. And that's still right. But there's only one exception for this, when there's liquidity inside of that zone. And the zone is, for example, too huge for the full body entry, and prices built up liquidity inside of that zone. You can actually enter on that zone that has liquidity inside of it. So this is the only exception when you can actually expect for a second mitigation of the 1 minute zone. Just remember for this. This might be a new concept for you. Please just remember for this concept, or take notes or anything. So let's just play it forward. What will happen with the second zone? There's a reaction and blow through and stop loss. Bam. Liquidity. This zone has become liquidity. What will happen with the second zone? Okay. Tag him. Tag him. Let me just extend the zone and the position 2. And reversal to the downside. Perfect reversal. Liquidity has been swept with this movement. Character has been changed here. Okay, let's just track the criteria for this zone because it's quite interesting. Criteria. Price is moving in a pullback phase of the 4-hour trend, right? 4 hours bearish. So the main trend is extremely bearish for us. 15 minute, 5 minute was moving in an uptrend, creating breakout structures to the upside, breakout structures to the side, respecting demand zones over and over again. But after the character changing movement, price has stepped into a random 15-minute supply zone, right? Price has stepped into a random 15-minute supply zone. That 15-minute supply zone was strong enough to build a character changing movement on the 5-minute chart here to the downside and built up an extreme zone for us. There was an extreme zone for us that was the origin of the character changing movement. Prices returned to the origin of the character changing movement, and after a return to the origin of the character changing movement, it has character changed again on the 1-minute chart. So fractal confirmations has happened on every single chart because the 4-hour is bearish, 4-hour is confirmed that it's bearish, 15-minute has turned into bearish because it has reacted on a 15-minute zone and changed character on the 5-minute. So the 15-minute, 5-minute has turned into bearish, and after the 1-minute has turned into bearish, you could enter in a trade. So all of the fractal confirmations, 1 minute, 5 minute, 4-hour, 15-minute, 5-minute, 1 minute has turned into bearish. Every single time frame has turned into bearish, turned into our favor, turned into the main trend actually. So on every single time frame, the fractal confirmation has happened. Other criteria for this zone. Prices swept liquidity into the higher time frame zone, right? There was liquidity built up for the higher time frame zone, or even this was liquidity built up for the higher time frame zone. It has been swept into the higher time frame zone. After this, prices created a flip zone, character changing movement with inefficient movement, and built up liquidity for the entry. So basically, this was almost a full criteria trade for us, which I will take no matter what. That's why I took it in the live session too. And I believe it's already, it's still good to talk about this trade because if I remember well, I haven't created any case study or recap video about this session. So it's nice to break down for you guys that you will see this in the future too. For example, this liquidity type, for example, this reversal type, for example, these fractal confirmations. So you will meet with these scenarios in the future too. Okay, but let me just continue. So we are actually in the trade. We are aiming for the last recent 15-minute zone, right? We are always aiming for the last recent 15-minute zone. This isn't a 15-minute zone. This can be considered as a 15-minute zone. This can be considered as a 5-minute zone because this couldn't break over the last recent high point. So this is weak. This zone, I mean, this low point is weak because it couldn't break over the last recent high point that was change character here. So this will be weak. The only strong zone in this scenario, sorry, where's the back, madam? Here. So the only strong zone in this scenario will be this one because this zone has created a less recent 15-minute break of structure to the upside. Right? Right. So we will aim for the less recent strong zone. And the strong zone is this one. This is a weak zone. We can't aim for a weak zone because that zone will be broken and we will lose restore ratio if we are aiming for weak zones. If we are aiming for strong zones, we can maximize the overall profit from a trade. Okay, price is just moving nicely. And there was a flip zone. Okay, sorry, I didn't mark it. There was a flip zone. Last recent demand zone on the 1 minute, of course. This is the 1 minute substructure. Last recent demand zone that has broken with the last recent 1 minute supply zone and swap liquidity. Price was just reacting on this demand zone, right? There was a reaction coming down, reacting on this demand, mitigating the 50%, coming up. This upside movement wasn't strong enough to create a change of character here to the upside. It wasn't strong enough to break the swing high point. It wasn't strong enough to create any high impact movement. Instead of breaking above this supply zone here or this high point or changing character here, it just blew to the downside and created a swing low breaker structure. So here was a swing low breaker structure, right? This is a swing breaker structure to the downside. Swing breaker structure, and the swing breaker structure has happened from this extreme zone. This is the extreme of the swing breaker structure. This is the extreme of the whole flip, because as you can see between this candle and this candle, there's inefficiency. Inefficiency has started from this one. Flip has happened from this one. Swing breaker structure has happened from this one. So this could be a right entry opportunity for us. If price creates liquidity for this zone, that will be even better. I will just set an end limit order on this zone. Yeah, if the full body can cover the whole zone, then it will be enough because the wicks aren't bigger than the whole zone. So this is a full body entry zone. If there will be liquidity for this zone, that will be a perfect opportunity. I will target this zone with this trade also. Let's see what happens. Okay, there's actually liquidity. There was liquidity creation, as you can see. There was a perfect liquidity creation. And the zone has been tagged. We could have entering a trade. We are inside of this trade. And huge reaction, immediately huge reaction, as you can see. Perfect. Our TP will be hit. Our TP has been hit. We booked 7.6 restore ratio on this trade and 11 restore ratio on this trade. Perfect. So far, so good. Session close is 1 hour away. So let's just play price forward. And I will actually mark this zone out, because this zone has caused a huge inefficient movement to the downside, huge breakout structure to the downside, huge swing breakout structure to the downside, and demand tap and liquidity sweep, etc., etc., etc. This is a perfect zone to enter on. If price can break below this zone, if price can break below the demand zone, then this will be the right demand zone, I mean supply zone to enter on, because this could be easily liquidity built up for the upper zone. But if price can change character here to the upside without breaking below this demand over a 15-minute demand zone, then we can actually enter in a long opportunity, counter trade opportunity up to this supply zone. If this supply breaks, if this supply will be tapped and this supply breaks with a flip zone, then we'll be able to target higher price action. So this is a new plan for us. This is a new narrative for us. Let's see what happens. Price broke below this zone. Perfect. As I said, I will set an entry limit order on this zone. And the 50% perfect covers the zone. And with this trade, we will target the next 15-minute zone, which is this one down here. This week is the next recent 15-minute zone for us, as you can see. Next recent 15-minute zone that you can target. Perfect. Let's see what happens next. Price is reversed above that zone. Let's see if there was any 1-minute demand tap. Yeah, there was a 1-minute demand tap. Here, as you can see, price has mitigated this demand zone and reversed strongly on this zone. I will refine this zone for that 1 minute. Perfect mitigation, perfect reversal. Let's see what happens. There's a nice supply zone that has caused the break. Okay, sorry, let me just close these zones. This supply zone has caused the flip of the overall 15-minute zone. If price can change character on this zone, then we will enter in a trade. No, it couldn't change character. Actually, instead of changing character, it has just flipped the zone. The flip has happened. Okay, why can't I choose my screen? The flip has happened from this demand zone down here, as you can see. So this will be a bad opportunity to enter on. So I wouldn't re-enter on this demand zone that has caused the change of character here to the upside, because this is a counter trade. For a counter trade, we need a strong change of character, right? This is a weak change of character. A strong change of character would happen here. If price can break above this supply zone, there will be a strong change of character. If price can break above this supply zone, there won't be a strong change of character. So I'm just rather waiting for a supply opportunity on this trade than just entering in the long trade. But this actually could have been a good opportunity. As you can see, price is reversed nicely on this zone, building up liquidity. Okay, perfect liquidity building up. Liquidity was building up for this supply zone here. Okay, more liquidity, sweep. Okay, and seems like this sweep wasn't strong enough to actually enter in a trade. Let's see. No, it can't reverse. Okay, so this trade has been missed. Perfect. Never mind. Actually, as you can see, price has swept the liquidity. This movement to the upside wasn't strong enough to tap the zone. It was just strong enough to sweep the liquidity. I mean, this liquidity was strong enough to reverse price without tapping into a supply zone. This liquidity sweeping movement was just perfectly enough for price to reverse to the downside once again. And this zone tap wasn't necessary to be tapped. So yeah, let's see what happens next. We have a new zone. When will the session close? In 20 minutes, we have a new zone that has caused the change of character here to the downside. As you can see, the change of character has happened here. We have a new zone that has caused the change of character, and the extreme zone will be this one. Even this is a flip zone too, because it has reacted on this demand zone. This is a new flip zone. And with the liquidity creation, I will actually enter on this zone. Or actually, I just saw this opportunity. This could have been a good opportunity also right here. As you can see, this supply zone, after the sweep of this liquidity and breakout structure here to the upside, this supply zone has flipped this demand zone right here with this inefficient movement, and price has just reversed on this supply zone. But in live trading, I wouldn't enter in this opportunity because I would consider this as risky. So yeah, but I just saw it that this could have been a good opportunity because it has swept liquidity, changed character here to the downside, and built up. This can be considered liquidity. So in live trading, I wouldn't enter in this position, but I will just saw this and show you guys. Okay, the swing low break has happened. Here's the swing low break to the downside, perfect swing low break, and the swing low break has happened from this supply zone, and this supply zone also flip zone. If you take a closer look, this supply zone has flipped this demand zone here. There was a reaction. Once again, same scenario, flip zone, etc. Price has just reversed to the upside. Sorry, reverse to the upside, reverse to the downside, tapped into the extreme zone. Extreme flip has happened. So basically a swing 50-minute/5-minute breakout structure has happened also to the downside, and swing 5-minute/15-minute demand zone has been flipped. In these scenarios, if there's liquidity creation for this zone, I will enter in a trade. If there's no liquidity creation for this zone, I will just rather wait for a 5-minute change of character. And after a change of character, I will just enter in a trade. Sorry, not 5-minute change of character. I will wait for a 5-minute zone tap, because more likely there will be a 5-minute zone tap too that has caused the 5-minute swing break. No, there's no zone on the 5-minute chart. So I would just rather wait for a tap of this zone, because if this zone can't produce any change of character to the downside, then this zone will be liquid for the upper zone. But the upper zone won't be touched in this session, because as you can see, the session will close in 10 minutes. So I don't see any chance for the reversal after the supply zone and entry opportunity on this. So I would just rather wait for the tap of the zone and character changing movement to the downside, which won't happen in this session either, I believe. Tap has happened, and there's a reaction on the 50% of this candle. Yeah, for perfect 50% mitigation. Session has closed. Don't forget that session has closed, okay, so we can't enter on this position up here. Yeah, let me just play forward what will happen. Price just blew to the upside. So the session is closed for us. Actually, that's why I said that in this session, there were lots of opportunities. This was a really, really good price action section because you just trade New York. Yeah, I just only trade New York. So in this session, there were lots of demand taps, lots of supply taps, lots of flips, lots of change of characters, breakout structures, etc., etc., etc. So this was a good session to follow. This was a good session to watch. But in this session, there could have been first entry opportunity, second entry opportunity, third, fourth, maybe even the fifth, sixth, seventh. So there were 7 or 6 entry opportunities all in this session. But according to our plan, according to the high probability plan that we are following, only 2 trades were enough to actually enter on that trade. The first trade was this one because this had all the criteria we need: higher time frame tap, liquidity sweep, tap of the zone, V-shaped recovery, change of character, flip, liquidity build up for this zone. So this is a high probability setup with high criteria. This was another high probability setup with high criteria, flip zone also, breakout structure, swing breakout structure, liquidity sweeping movement, etc., etc., etc. So only these 2 trades were good enough for us to actually take those. All of the other trades would have been good to enter on. But I call these trades, this trade, this long trade, this short trade, gambling. All of these trades are gambling for me. If there's no character changing movement on these zones, no other confirmation for this zone, no other liquidity building up for this zone, these are gambling trades for me without any further confirmation. That's why I'm only waiting for the high opportunities. Because as you can see, you can catch good risk-reward ratios with these gambling trades. There was a good risk-reward ratio with this on tap, with the 50%, 75% entry. This could have been a good entry opportunity. This could have run maybe to 10 risk-reward ratio. I don't know. This could have been also a good entry opportunity, which could have been a break-even trade. This could have been also a good opportunity, for example, right here. But these are low probability setups that won't fit in the actual trading plan of ours. We have to wait for the highest probability setups every single time, even in backtesting sessions. In this backtesting session, these 2 setups were the highest probability setups for us. So that's why we took these setups. You have to follow the same plan in live trading too. You have to keep the same discipline in live trading too. You have to actually keep up the attitude in live trading, because if you're doing this in backtesting session and just marking out the trades or just paper trading in backtesting session. So for example, I could have just counted this trade, and this trade, and this trade through into my overall risk-reward ratio on this backtesting session. But I just count these as paper trades. I know that these could have been a good opportunities, but these are low probability setups. So I only count these opportunities into my setup, into my journal, because I journal every single backtesting session for myself. So yeah, I just count the risk-reward ratios overall, 11. So it was almost an 18. Sorry, I'm ugly handwriter. I can't write down the 8. So it was an 18 risk-reward ratio session for us, which is actually pretty good for a bad price action month. Any questions about this session, guys? You can ask 2 or 3 questions because it's already 9 p.m. Thanks, few Marzo, for a great backtesting session. Thank you, Joe. Welcome. Yeah, thank you, Amir. Any questions, guys? You can raise your hand if you get any question. Mark?
In the first trade, can we use only this week as a supply zone?
No, you can't. Let me tell you why. You can't use it as a supply zone. Let me just zoom in, sorry. Because if this would have been a weak entry opportunity, then the week has to be higher than the actual candle's last high point. Less high points, less candles actual high point. So if you would have used the weak entry, then this week would have been this high, and then you could have used the weak entry. But this week is lower than the actual candle's high point, so you use the full candle.
Okay, thank you.
No problem. When we discuss premium future millionaire, we will discuss it in one of the Wednesday's webinar. Don't worry. Yeah, guys, we will talk about the premium and discount. We will talk about a new concept, and that will be a new concept for us. And no, actually, every other community teaches the premium and discount, but I will teach you something new. I will teach you something new about the premium and discount, and the premium and discount teaching won't be that like, okay, if price in the premium, you can't enter in a trade. If price is on discount, you can enter in trade. No, it won't be this bad. There will be a new concept around the premium and discount too, because I tested something new around the premium discount, and that shit is actually pretty useful. That shit is busting for real. Just trust me. I tested it, and that is so good. And yeah, we'll teach you. But actually, in the next Wednesday webinar, we will talk about the challenge passes and challenge mindset. So maybe I will host a bonus session, and in that session we will talk about. But don't worry, we will talk about everything. You are always testing something new. Yeah, you have to keep grinding. You have to keep refine your trading plan. You have to always test new things out, because the markets are evolving. On every single week, every single month, the markets are evolving. All of these price sectional movements are evolving. And with the old trading plan, of mine, for example, from last year, from last January or last June, that trading plan wouldn't even work on this special price action, because the markets are evolving. You always have to refine your plan. And if you don't refine your plan, you will be burned out from the market. You have to keep refining your plan, find the new concepts, and adapt on how the market is changing, because market is changing. For example, a year ago in flipping markets, we didn't even trade. We didn't even use the week entries. We didn't even know about the week entries. I didn't even care about the week entries. But I just realized that price has started to respect the weeks in these specific scenarios that's in the PDF and the video course. But you have to use the week entries, and you can't use the actual full body, because those aren't working anymore. And this has happened in like 2 or 3 months. And the market has evolved, and the market is adapted, and you have to adapt with the market. If the market is adapting, you have to adapt with it. And you can only adapt if you're testing the concepts that the market is showing you. If the market is showing you a new concept, you can test that concept. But it takes time. It takes some actual backtesting time. You have to sit in front of your charts and backtest. But don't worry, guys, you don't have to test new concepts. I'm testing the new concepts for you. I'm always sharing the new concepts with you. And yeah, I just, from the first release of the PDF, which was 1 year ago, I just updated it like 10 times. And I'm always updating you with new concepts, because we are learning, we are evolving, we are adapting with the market. And that's what it takes. And you don't have to adapt. I mean, you have to adapt, but you will adapt what I'm teaching you, because you don't have to actually test the new things. I will test it for you, and I will actually update you if those new things are working or not. So yeah, all you have to do is keep backtesting the techniques that we are learning here, that you are actually seeing in the recap videos, webinars, markups, etc., etc., etc. If you are seeing a new concept, just please do yourself a favor. I mean, seeing a new concept that I've showed you, please do yourself a favor and backtest those concepts. I'm not showing you those concepts to entertain myself or something like this. I'm just showing you that to actually adapt from that new concept and use it in the future. And you can only use a new concept if you backtest that concept enough. So yeah, that's about this session. I hope it was helpful for you. John trade in London, the time Marcel. No, I'm not sleeping. We are living in the same time zone as John. I don't sleep in London. I just have other business and stuff to handle in London session, and I'm only available in New York session. Okay, guys. So that's it. Thank you guys for being here. I will stop the recording.